Hello, everyone. Depending on whichever part of the world you're tuning in from, good morning, good afternoon, and good evening to you. I'm delighted to welcome you to another insightful session of our weekly price action based technical analysis series. In this episode, we will be delving into the GBPUSD market structure. Before we begin, I want to mention that I have a bit of a sore throat today. Please bear with me if my voice sounds a little bit different during the video. I will do my best to keep it clear and engaging despite this temporary challenge. Before we proceed, I would like to emphasize that this analysis is purely for educational purposes and not a financial advice. The forex market involves substantial risk, and trading decisions should always be made with caution. I encourage you to consult with a professional financial advisor to assess the suitability of your position before making any investment choices. So, last week was nothing short of extraordinary as we navigated the markets, seizing opportunities on both sides and capitalizing on over 1,000 pips of price movement in our favor from the previous technical setup. So let's focus on the key moments that shaped our decision for last week's trading session. So at the beginning of the week, we saw that we had a consolidation phase, which emphasized the level of indecision in the market as price action was confined between the 1.287 and the 1.2849. Though we had signs that selling opportunities will come in, which we of course took advantage of, but these sell positions did not last long as we saw how it became difficult for sellers to break through the 1.282 area, which we later identified as a demand zone. And with continued buy pressure around this area, we decided to join a bullish move if price action break out of the 1.284. And it was not until on Tuesday that we begin to see this momentum and we took advantage of this bullish move and rode it all the way to the upside, capitalizing over 420 pips from five positions. Then another moment didn't come until Thursday, that was prior to the GDP data, where we begin to see bearish expectations. And with the breakdown of the 1.295, we capitalized on the bearish move, which took price all the way to the downside. And on this scenario, we were able to scoop over 500 pips on that single move to the downside. Then on Friday, we begin to see some buy pressure resume, which we of course took advantage of. I think we had about 60, 70 pips on that move before the market closed on that day. So it was quite an interesting situation for us last week as we were very, very profitable. If you are eager to review this commentary for educational purposes, you can find the link in the description box below. And if you are watching this from my YouTube channel, the link is placed at the top right hand side of your screen. So, today, as usual, our analytical approach in this video will revolve around using simple yet powerful parameters such as trend lines and key levels, and of course, chart patterns too identify potential trading opportunities, and of course give us valuable insight into the historical price movement of the GBP USD market. With the groundwork laid here, let's dive right into the business for today. Now, the first thing I did here was to take into consideration the nature of price actions activity since the beginning of this year, and this is right on the daily time frame. And what I was able to come up with here are a couple of trend lines which emphasize the strength of the buyers in this particular market. So after connecting the series of higher lows, we came up with the trend lines you can see on your screen, which of course has been supporting that bullish move. Now, in addition to this trend line on the daily time frame, is that key level I was able to spot at the 1.285. And in fact, if you look at this closely since the mid month of June, you will see how this level had been a major determinant of price action. Look at what happened here on in the month of June, we saw how it was a strong selling niche before the breakout of the structure happened during the second week of this month. Now, price is back into that structure, and we all know that from a technical standpoint, when price action breaks out of a key structure such as the 1.285 identified here, we expect that from a technical standpoint, price is likely going to come back, retest that structure in anticipation of an uptrend continuation. And another interesting thing about the 1.285 here is the fact that it also shares a confluence with one of that this ascending trend line we identified earlier. Now, with the setup we have here, the question is, will price action respect the ascending trend line one more time to incite an uptrend continuation? Or is there going to be a situation where price will drop, break down the ascending trend line to incite a sell off? Now, to answer that question, we want to take a critical look at the current market structure, taking into consideration what happened last week. But before we delve into a lower time frame, I want to share with you um, the economic event that is likely going to be um, shaping the nature of price movement for next week. And we all know how important it is to check on the economic calendar, as these fundamental factors often manifest on the chart in technical patterns and, of course, price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. And right here on the economic calendar, we shall be focusing on high impact events from both the UK and the US economy. So at the beginning of the week, we have on Tuesday, August 1st, we have the ISM manufacturing PMI from the US economic docket. And on Wednesday, we have the ADP employment change. Then on Thursday, we have a day jam packed with a series of high impact events coming in from the UK economic docket, which of course will be happening simultaneously. And one of the most important one here is the interest rate decision, which of course majority in the market will be looking forward to. Then on that same day, we have the ISM Services PMI from the US economic docket. And from Friday, we have the average hourly earnings and, of course, the non farm payroll. So these are very high impact events that everyone in the market will be looking forward to. And of course, the anticipation of this event will reflect on the chart as price action. So now diving right into the 4 hours time frame where I was able to identify a setup that we can use to guide our trading activity. Now, one of the parameters on the 4 hours time frame that we are going to be using is first of all, we have a descending trend line after connecting the series of lower highs. But one thing for sure here is that despite the lower highs, it is quite clear that sellers are finding it difficult to find a new low. As you will see that since the beginning of this month, that zone between the 1.285 and the 1.296 has been a strong buying niche in the market, hereby negating all attempt by the sellers to break through that zone. So, with this setup here, I'm of the opinion that we are likely going to be seeing an uptrend continuation if price action remains above our key level at the 1.285, where a further breakout of the descending trend line and the 1.297 will welcome more buying opportunities. However, if price action slices through the zone between the 1.285 and the 1.296, which of course would have also broken down that ascending trend line we identified on the daily time frame, then at this point we will be considering selling the GBPUSD. But most importantly, we want to see how the market participant will be reacting to this key level at the 1.285 during the early hours of the week. And of course, I will be with you in the comment section to give you an update after monitoring how participants in the market react to this zone. If you found this content helpful and useful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.